welcome everybody. I'm Bill Murphy, if you don't know me. I'm also Bill Murphy if you do know me. This is understandably.com. This is Understandably Live, as I've taken to calling it, where we are interviewing all kinds of interesting people. I should state up front that the person we're interviewing today is Andrew Hutton, who's the CEO and founder of DayOne, which has been our sponsor all through this week. So just want to disclose that. But I wouldn't have asked him to do this if I didn't think it would be a really interesting conversation. So I'm recording this. It's going to go on YouTube afterward, I'm pretty sure. And just so you all know. And with that, let's get started. If you do you want to just introduce yourself, Andrew, and tell us about your background in DayOne?
Absolutely, Bill. Thanks for having me on. This is exciting. It's been great to kind of work with you throughout the week, and exciting to do this and talk to some of your readers, your audience, and you guys here. It's great to get to chat a little bit. So, like Bill said, I'm the founder of a business called DayOne. We are a community and kind of an ecosystem for early stage founders. And I use those broad words because it's really more than other things like a school or a course. It's really what we're building is a new starting spot, a new place for founders to get from the starting line and get going. And you could call that an accelerator, but it's a very early stage. We do teach a lot, so it could be a course. There is a very big community aspect to it. But before launching this about a year ago, before launching DayOne about a year ago, I was building startups inside of a venture capital firm. And so really interesting model where a VC firm hired people like me to get startups launched from scratch. And so we had a whole business model around exploring business ideas, different ideas, figuring out who we would work with, which entrepreneurs would bring those to life with us. And then we had a whole methodology process to get those off the ground. And then when we did, the VC fund would take over and invest and help them scale away. And so they would fly out the nest, and it was my job to come back to the blank whiteboard and get the next one going. So did that for about 3 years. And that's really where I learned the whole kind of world of launching a business. Consulted by trade and kind of trained in the innovation arts of human-centered design and design thinking. And so that's a lot of where what I bring to the table from sort of my background in pedagogy. But yeah, it's all been sort of a wild ride of supporting founders and startups in new, different, and fun ways.
Sorry, trying to unmute myself there, and I got fat fingered for a second. Yeah, it's interesting. I mean, we'll talk a lot about this. That the two of the things that really struck me when we were talking earlier were, one, just the dichotomy of like a lot of basically that you're not taking a stake in any of the companies coming into this, which a lot of other communities would, and also just how that changes maybe who would apply and what they're aspiring to build, and how I've been a part of a lot of sort of online communities of entrepreneurs over the years, and there's how do I put this nicely? There's a lot of people, there's people that are worth your time, there's people that are not worth your time. Let's just be honest, especially when it's an ungated thing where anybody can come in.
Yeah.
So of course, the quality of the people in the community is, one of the big value propositions.
Absolutely. So no, you've hit on one of the big things. I'm glad we get to cover that. So coming from the world of venture capital is run on one very specific business model, right? Make investments. You've probably heard that like 90% of startups will fail. And so they'll make a lot of investments and hope that a small number, 1 out of 10 perhaps, make it really, really, really big, right? And so everything about the venture capital world is driven by the idea that we're really looking for these outliers, right? We're really looking for both these people and these business models and these ideas that have the ability to be the next Airbnb, the next Uber, whatever it might be, right? And so, but the reality is that is just a tiny, tiny, tiny sliver of all the entrepreneurial activity out in the world, right? Sure. It's not Main Street. It's not small business. It's not agencies. It's not coaching. It's really not most of what entrepreneurs would build. And so that's what we're sort of breaking against. And one of the ways that we do that is by not taking equity. So if we were taking equity in businesses, or if we were an investor ourselves, we would have to go play that other game, right? It's a rational move for venture capital to do what it does. It's sort of how they create returns. And the way to break that is to say, we're not an investor. We don't take equity. We don't give you capital. We are a service provider. We are here for you. You're our customer. We need to, create very satisfied customers, deliver 10x the value that, we're charging you for. But otherwise, we're largely recreating the services that top tier venture firms have aggregated together, when it's the communities of really, really talented people, the mentorship that happens from, experienced founders and investors, not because they're necessarily investing, but because they've seen a ton of businesses and they can help you craft yours and guide you through your early stage journey. We make it accessible. So it becomes more like a school as a business model, right? And you join our programs. We call it a fellowship. You join our 10-week fellowship, and there's a fee, and it's actually that simple, right? And because of that, you're our customer, and we are here to serve you and make you the best entrepreneur you can be, to embed you into communities that'll accelerate you further and along. But yeah, it really changes the game to not be this kind of venture capital bound institution, but to be a more honest, focused broker focused on entrepreneurs.
You're kind of reminding me of I guess it's a joke, apocryphal story. I read a book about Harvard Business School, and there's a joke about the angry student going to see the registrar and saying, "You guys are messing this up. I can't get the classes I want. You're not." And the registrar was very dismissive. And the student, of course, says, "What kind of business is this? You treat the customer like this?" And the punchline, of course, is, "Well, at Harvard Business School, you're not the customer, you're the product." So, hey, just a reminder, everybody, the chat function is open here. So if you have questions, anything that pops up you want to ask, just put them in there, and I'll kind of act as a conduit here. And just a reminder, we've had a few people join. We're recording this. I'm talking with Andrew Hutton, who's the CEO and founder of DayOne, which has been our sponsor all week. So, hashtag sponsor. I think I'm supposed to do that. Can't believe I just did that. Anyway.
I love it.
So, okay, since you have this model, with the venture capital model, money is a very important part of the process, right? So it's so that's a big, but you're not doing that.
Yeah.
So in the beginning, how do you get, how do you build this? You have a chicken and egg issue, right? Because part of the value proposition is the community, but you don't have people in the community until you have a value proposition. And then the other piece, the education piece and the mentorship.
Yeah. So this is one of those things where it feels like I'm pretty well suited. I won't go so far to say I'm the only one in the world who could build this, but this some of the pieces that saw that chicken and the egg were really right in front of me when I joined. So coming out of the venture world, I had a decently big network. I had access to a lot of the mentors, a lot of the kind of one side of the community was already built in because I was bringing that to the table, and people were really interested in the new model. So like a lot of entrepreneurs, you sort of, make set a vision, you kind of make the world, you do a little, I won't say I was like reality distorting, but you basically say, hey, we're trying to do this really, impactful new thing, and please come along. And that happened. So really, we got to jumpstart the community by saying there's hundreds of mentors who are really interested and keen and leaning in, basically as the foundation for the community. So that's how we solved thing number one. And then thing number two is, I didn't mention this in my background, but I have basically a background as a teacher, not as a grade school teacher, but I was a professor at Parsons School of Design here in New York City. My roles before venture were very much in consulting and facilitation of workshops and learning experiences for professionals. And so without being like necessarily like the professor with a PhD, that was my background of like teaching adults and teaching, in the working world and in career environments. And so that's what DayOne is. It's very much that like school like experience, but just reimagine, like take school, but then like start to rethink it, right? It's not just, you sitting in a course in a class of 20 others with a professor, right? It's hands-on, it's engaging, it's learning by doing, it's a lifelong. 10 weeks is like a starter. It continues on much, far beyond that.
Sure.
Because your career as an entrepreneur continues on far beyond that, right?
Sure.
So hacking it to start wasn't too hard from our side. Because we were pretty well positioned to say like, this new thing, we're going to try it. And a lot of people believed right from the get-go. And so the other thing you mentioned though is really worth talking about, which is like, so what happens when you don't bring money into the ecosystem? Don't founders need money? And that's true. It's definitely a very big problem to solve. I would say one thing is venture capital itself as an asset class is really only not just targeted for, but really only available to, let's just call it 1%. Like on the order of magnitude, it's a percentage of all the entrepreneurs out there, right? You would not go to venture capital to build an agency, a coaching business, like a small scale like shop, an e-commerce shop, an Amazon business. The vast majority of things you wouldn't go there. So there, whether or not DayOne solves it, there's a huge capital problem for the vast majority of entrepreneurs. Somewhere between an SBA loan and venture capital is like a huge gap, right? Yep. I would love for DayOne to get there and figure that out. I'm not a financier. I'm doing what I'm good at, right? Supporting, helping, guiding. At some point, I think we or somebody else, and we'll partner with them the second they do it, will help fill some of those gaps in terms of how do you bring capital?
Sure.
But the last thing I'll say, which is that this is sort of our pedagogy, like our focus, and what I believe founders should focus on. This is the advice I'd give everybody, whether they're in the program or not. But this is a narrative I'm sort of working on. Before you decide what your trajectory is, before you decide I'm going to shoot for the moon and go pitch venture capital, or I'm going to bootstrap and kind of like keep my day job and side hustle this and do it, before you even really make those decisions, I feel like there's a primordial stage of a business where you're really figuring out, is there a thing here? Is there even something to be done? Should I even invest my time, energy, money into it? And that's really where DayOne plays. And we want to help founders get it right sometimes before they quit their day job, but plenty of times founders have quit their day job, but before they get too far down the road, before they kind of like get overly fixated on, one source of capital, before they spend $100,000, making that first run of products or whatever it might be, DayOne is the place to get things right and get yourself oriented, set up, do your due diligence, do your customer discovery, prototype and test your product before you invest thousands and thousands of dollars.
Right.
There's a question here about what mistakes have you seen? Those are the biggest ones. Overinvestment before you know you've got it. Hands down is what just sinks founders, because it's either they shot their one shot because they spent $50K developing an app or a product, and the odds of it working are actually very, 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 very low when you do it like that.
Yeah.
So like you just shoot your shot and you don't have it, or you just get like overly committed and you might have runway, but you like the sunk cost of like, man, I pushed here. Now that's the thing.
Right.
That is so dangerous, right? Startups need to be super iterative, right?
Yes. Yeah.
So we try to help you stay nimble.
So why don't you give us, tell us a little bit about some of the companies that have come through it, some of the startups. I was looking on LinkedIn, you've got a few sort of alumni shouting each other out. But I would say tell us about some success, but also some that maybe, I don't know if they want to be called out, but like, that they've pivoted afterward or said, this isn't for me. And I'll throw the third thing in, which is that you talk about, this is the big thing that hit me, was that you talk about coaching businesses and consulting businesses and things like that, which is, it's interesting. I don't think a lot of, I mean, when people talk about a startup, it's just often it's not what they think of, but it seems like that's a sweet spot for you guys.
No, it isn't. And I kind of probably shouldn't like over index on those. I kind of use them to do what maybe I did accomplish, which is to be so different from the standard software businesses that most startups are. And there's a whole conversation we could have about like, what is a startup? Paul Graham asks this question, and it's about growth. So if you just want to call a startup a very fast growing business, that's fine, but it's still not the majority of what founders are building. They're building, whether they're using software or not, they're building small businesses, slower growth businesses, service businesses, whatever it might be. So there's no one great word for like everything else that isn't fit for venture capital. It's a mix of the growth. It's a mix of the business model. It's a mix of a few different things, but yeah, back to the companies that come through. It really does run the gamut, right? I'll probably pull some stories, or I have some folks in mind that are in our most recent cohort that's just finishing up. So we're just finishing up our third cohort. Fourth cohort is kind of is running right now. Fifth cohort is coming up in just a few weeks, and I'm thinking about, so here's one very common archetype. I'm kind of like bringing 2 or 3 founders together in my mind. These folks have been running businesses. They've been entrepreneurs building, businesses that you haven't heard of, but successful businesses. One woman had a yoga studio. Another woman had a wellness travel business before it was called wellness tourism, right? Before it was like a thing. She was taking people to destinations to do yoga retreats and all those things. And then the pandemic happens, we're a year and a half into it. So a lot of businesses just got like turned over, right? And what these folks are doing is they're coming in saying, okay, maybe the old business comes back, but enough has been shaken loose and I want to get going with the next thing, that I need to figure out what's the next extension of this, right? What's the virtual, the digital, the lightweight, whether it's a course or an app or whatever it might be. And so what these folks do is they come in with this like wealth of experience and kind of like understanding, but they haven't done it in a long time, nor are they like really savvy or like very experienced at like quickly iterating business idea A versus B versus C versus D, right? They probably got into this 20, 15, 10 years ago intuitively just because they loved yoga or they loved travel or something, right? Most entrepreneurs do that. That's sort of the standard way. We're teaching the like intentional way. And so what these founders do is they kind of try everything on while kind of learning the like methodology that, we used to practice back at the venture studio. So first it's, lay out your business hypothesis, then go really deep validating your customer, and then go validate your, prototype your solution, and then start to go to market and figure out your positioning. And then finally wrap it all together in a pitch. And we teach that in 10 weeks. So what happens for these folks, kind of going long-winded into this, but it does in one way maybe highlight what we do. They leave with that directional sense of like, okay, this is my new business, right? They leave saying, so the one woman who had a yoga studio has kind of gone almost full circle through half a dozen different ideas, talked to her customer. She always had customers, but she learned customer discovery and how to do kind of structured, rigorous user interviews. We pushed her to prototype new landing pages, and she uses that to come back around and say, okay, I now have direction. Now I'm not like done and dusted. This isn't successful yet, but I know where I'm going next, right? And that going next for her is to create a sort of multi-layer course community business. It actually feels a lot like DayOne, but for wellness and yoga, right? Maybe we incepted her to think that. So yeah, that's a journey that's happened a lot recently. I've started to see it more and more, more commonly. The other really common use case is a professional who spent, sometimes they're younger in their career, 3 or 4 years, sometimes they're 20 years in, but they, have had a corporate career. So, I know one woman was a consultant. Another woman was 20 years in the art world, right? And now they're jumping into entrepreneurship for the very first time, right? And so the woman in the art world very much like is just like one of the smartest people you'll ever meet, a very established or kind of accomplished professional, but is building something in a completely different space. Okay, now she's just got to go to 101, like learn the entrepreneurial steps, right? Let me go talk to this new customer, and not just because I've felt a new need, let me go really validate the problems and the solutions, or the problems, and then test out my potential solutions. Mm-hmm. And she leaves with clarity, direction, momentum, because she sort of like took, carved off the pieces that aren't going to fit, refined the things that are there. So I'm kind of using generalities because that's actually, the brand names aren't there. The people are still in the program, right? Like, but this is the common thing. There probably are some businesses that I could talk about that are a little further along, that are more like, that are, using the community as sort of that sounding board to make their next big move. Like they're raising money, or they're just like working on their go-to-market because they already have products in market, things like that. But that's not necessarily the core of where we focus, right? We're very much in that like get it right phase of building a business.
Interesting. There's another question here, just because you're not the only company doing this. I was just wondering, give us where do you fit in the competition, and tell us what differentiates you.
Yeah, absolutely. So I actually don't have I see it in the question as well. Startup Grind. I've definitely heard of them. I don't have like a strong sense of like their value props. Um, but I will, so I won't necessarily like talk about them, but I'll talk in a bigger picture of who I do know and think about. So on one side, we have all the venture capital. So we have accelerators is kind of the big one. There's obviously all the funds out there as well, but accelerators, Y Combinator, Techstars, there's a whole big long tail of like local and city and university accelerators. Um, and so most of what I pitch in the beginning is how we're different from accelerators, right? We're not equity. We help you when you're still getting the things together, right? When it comes to the community-based, holds conference fee-based, yeah. So so maybe back in the realm of like who else is like doing these, whether it's conference-based or community-based programs. There's programs out there. I'll just call them out. There's a program out there called On Deck that does similar things in terms of creating, cohort-based communities, Startup Grind, community-based, holds conferences, feed-based. Who else is out there? There's someone called Founder Institute that's out there. Yes, there's like 3 or 4. In fact, there's probably like 30 or 40 other different programs that are helpful for startup founders. What we really focus on, what I think differentiates us is we've focused very much on the guidance that it takes for every individual founder to sort of to basically work through their own stuff. So every other community or kind of curriculum-based program basically is close to one size fits all, right? And a community is great because you can sort of like find your place in the community and you can go figure out like who all the people who love your industry, all the fintech people over here and all the, crypto people over there, whatever it might be. But we've learned from running these now for a whole year that the thing that makes people have not just like a great experience in our fellowship and like feel embedded and connected, but to really drive the outcomes is to have one-on-one coaching. So there's 3 layers to our program. It's one-on-one coaching, it's high touch mentorship, and then it's the curriculum in the community. And so if folks are more curriculum and community, we're layering in a ton of high touch, kind of close knit guidance from a very broad group of mentors, as well as folks who are in the game with you. So that's how we try to differentiate. And in some ways that's because we're small and new and we can basically say, if I'm helping a founder with no baggage around me, what would I do? How would I structure this journey? And the answer is I would get you in with somebody who knows the journey and can get you out of your head, who can bounce ideas off with you, who can hold you accountable every single week. There's actually kind of no magic sauce besides like, you kind of just have to work through it and you have to have enough touch points and enough time on target. So it's a little bit tough to sell because I'm like, there's definitely no easy button here. I wish there really was. I wish there was some like magical easy button for entrepreneurial success, but it's like, if you're going to put in the work, we'll meet you there. And we've created this like efficient place for you to have like all your effort multiplied and bounce back to you. So, that's like largely how we like what we hang our hat on, right? The guidance, the clarity that comes from it, and just like the high touch interactions with all the people in the ecosystem.
Andrew, can you give me a little more clarity on the? I get the cohort is 10 weeks long and there's a lot of things involved, but is it like touching in daily or is it periodically?
No, it's pretty much daily. And so there's a weekly flow. So over the 10 weeks, there's a weekly flow and connection point with that mentor who's your co-pilot is what we call them. So you're getting that coaching, you're getting that accountability, and you're getting that literally that guidance from a one-to-one session. So that kind of kicks off a week. It usually is a Monday or Tuesday where we get those scheduled in. Then throughout the week, we host these mentor sessions. And sometimes they're with founders who are, just 10 steps or 5 steps or 2 steps ahead of you. Sometimes they're with operators who are just, masters of their craft, whether it's marketing or technical products, whatever it might be. Other times it's investors, right? And we have pitch sessions where you get to practice in a very, very safe environment. So it's sort of a buffet throughout the week. We host these sessions. You go to the ones you can go to. We record them also if you can't make it. So there's a buffet of sessions that you lean into. There's the kind of weekly cadence of meeting with your coach, with your co-pilot, as we call them. And then there's a few other layers to it. There is a curriculum where if we are pushing you, and this is where the coach is kind of like a TA, where you're working on project-based, you're working through this project-based curriculum. So you're shipping pieces of your business that we know you need to ship. So that's where we kind of say there is a one size fits all, because every founder needs these 5 things. It's actually 9 things. Every founder needs these 9 things. And we think you should do them. We're all adults, so we don't make you. There's no grades, but we think you should do them and come away with them at the end. So
wait, did I miss? What are the 9 things?
Okay, here we go. So the 9 things are, building in public.
We only have a couple minutes, but
let's see if I can do it. Building in public. So we really teach you to like get out there. Business model design, customer hypotheses, meaning who's your customer target, your target persona. Customer discovery, how do you go interview them? How do you learn from them? MVP building, how do you ship something? How do you ship something small, quick, light? Experimentation and testing. That was 6, 7. Experimentation and testing.
Yeah.
Positioning. So how do you begin to go to market and craft your story to your customer? Fundraising and pitching.
Got it. Okay. And so it's sorry, I'm just thinking about this. You talked about like if you're going to ship something, did you say there is or there's not a model of like a TA or something that you're coming back and saying?
Oh,
hey,
there is. Absolutely.
What do you think about this?
That's exactly it. That's exactly it.
Okay.
And so you have your TA, you have the mentor who's coming in on a random Wednesday, who's a product expert, and then you have your peers. And then you have, of course, folks like us. Yeah.
Got it. Good. Okay. Excellent. So I've been promoting all week. Again, Andrew's a sponsor, but I think this has been really fascinating. This model is just really interesting to me. So you have a new cohort that's starting. I've been promoting it all week. When's it start?
So July 18th is our next group.
Okay.
Yep.
And you're talking about one after that as well for.
Exactly. So we've started to run these every 6 weeks. And they overlap, which is great because you get a small cohort experience, but you also have other cohorts to interact with. So the community feels small and big at the same time. And that's something we take kind of special care to focus on.
Got it. And obviously the link has been in every day, but what's the best way for people to get in touch?
Yeah. So if you go to joinday1.com, you'll see sort of a lot of stuff. You'll let us kind of tell our story a little bit more. Join DayOne, joinday1.com. And there's ways to apply there. There's ways to reach out if you want to get a one-on-one and talk about the program. We'd love to do that. So you could just honestly straight up email me, andrew@joinday1.com. I do not mind. Please just say, hey, saw you on Bill's webinar podcast, and would love to chat. So either which way, go check us out. Come send me an email, find a time on my calendar, and would love to chat with you.
Okay. Well, I think we're gonna leave. Better to leave everybody wanting more. So.